Hello, no mai, hoki mai. Welcome back to the final day of the Financial Services Council 2020 Conference Generations. I'm sure you've had a relaxing break following the calming tones of Jace Tapatu. Jace has such a story and an incredible vision for New Zealand and our younger generation. Be sure to practice his mindfulness techniques and maybe even the odd yoga pose on a regular basis to improve your own well-being. I have the pleasure of opening the final sessions of the FSC's 2020 conference. There is a choice between the final Generations session, focusing in on being better guardians, the second FinTech session of the day, which changes the focus from wealth tech to insurtech, the last of 4 insurance breakouts, which features Dr. Rob Young, and the third investment panel, discussing human versus digital in the advice space. Thank you again to our sponsors, ANZ and Partners Life, for their support of these sundowner sessions. Once again, in all sessions, there is the opportunity for Q&A, so please take note and enjoy. Mā te wā.
Good afternoon, and thank you for joining us in the final session at the 2020 Financial Services Council Conference. I think you'll agree it's been a fabulous few days, and the conference team have done a great job of pulling it together for us in this new virtual world. My name is Anna-Marie Lockyer, and I'm the CEO of AA Money and a Director of Pi Funds Management. Having spent 40 plus years on this planet and 20 plus years in the funds management industry, I've obviously seen a changing landscape over time. Today, we are here to discuss, debate and share views on the rise of the machines in the investment space with a focus on advice, so thank you for joining us. Earlier today, I reflected on the rise of machines from a personal perspective. The days when we went on our OE and had to stop in at internet cafes as we were not digitally enabled like we are today. The move from visiting the bank to phoning the bank to interacting with the bank on our phones whenever and wherever we are. The ability to buy, sell and monitor our investments online and get information and advice without interacting necessarily with humans. A quick review of digital advice this morning gave me 1.4 billion results in just 0.39 seconds. I'm sure that beats flicking through the Encyclopedia Britannica for knowledge. In the backdrop of COVID-19, we have overnight become a digital world, digital shopping, digital working, digital breakfasts, and digital conferences. It has made us consider how we use machines to keep our normal life running and stay connected with some semblance of normality. We have seen more New Zealanders needing access to advice as they have become investors through KiwiSaver. Back in 2015, the FMA released some stats indicating only 3 out of every 1,000 KiwiSaver decisions were made or occurred with advice. More recent research indicates that many speak to advisors, many do nothing, and many prefer to research and act online. And there are more options sprouting up to support the machines and complement the traditional humans. My hypothesis is that the solution is not one or the other, but the offer of both that will suit the needs of many. But first, let's see what happens when a machine tries to play a human to consider the challenges. Here is a short...
What does this action signify? As you entered, when you looked at the other human, what does it mean?
It's a sign of trust. It's a human thing. You wouldn't understand.
My father tried to teach me human emotions. They are difficult.
You mean you're a designer?
Yes.
I'd now like to move to introduce my esteemed panel, a team of true experts in the investment space. We have, representing the machines, Gary Green from Quanton, Kristen Lunman from Hatch, Noah Schiltknecht from Makao Investments, and Trisha Edmonds from ANZ Investments. So without further ado, I will allow the team to share a wink, provide a quick introduction of themselves and where they sit on the debate of the provision of advice from the machines or people. First, over to you, Gary.
Thanks, Anne-Marie. I'm Gary Green. I'm founder and managing director of Quanton. This is a company founded almost 5 years ago to help businesses implement new ways of working and new business models. And we've implemented and helped a number of businesses in the financial, banking, and insurance sector. I've got a passion for technology, and I see that it can be leveraged for the greater good and provide an edge to individuals, organizations, and businesses. So I'm in the pro-machine area, as I see that throughout human history, technology has helped advance our lives through adaptation and integration of more advanced technology and the democratization of services and products for people. At the moment, we're at the start of the fourth industrial revolution, and we have multiple technologies that are converging and going exponential, including AI, augmented reality, blockchain, quantum computing. And we're just at the start of this journey. And basically, when you get into that journey, you digitize, disrupt, demonetize, and democratize. And I see that very much the use of machines in this space will democratize the availability and quality of advice. I'm pleased to be invited to this panel, and I'm looking forward to an interesting debate.
Thanks, Gary. Over to you, Kristen.
Hi, everyone. I'm Kristen. I am the GM of Hatch. At Hatch, we are an investment platform that allows Kiwis to tailor an original portfolio based on what they believe, from stocks to funds. We are predominantly a self-directed platform, so we haven't considered advice in our services to date. However, we recognize that there is a big demand for advice and advising as people are building out their portfolios for the majority of Kiwis. And so it's something that we are really challenging ourselves with at Hatch. We're looking predominantly to tech to solve our problems as we've done to date. So I am on Team Machines. Absolutely, because I do think, as with Gary, financial literacy and advice and access to financial resources should be a universal right. Machines should democratize this access, and I believe that technology is kind of always facilitated taking something for the few to a state where everyone is able to participate. So I'm happy to share later about why proof of this and why machines are so important in our lives. And I'll leave it there.
Thanks, Kristen. We look forward to hearing back from you shortly. I'm not sure if anyone else has got feedback. I'll try and sort that out, but I'll pass you over to Noah in the meantime.
Thanks, Anna, and good afternoon, everyone. My name is Noah Schiltknecht, and I'm a consultant at Makao Investments. I started this business with a friend of mine, John Horrell, last year. It's a wholesale advisory business, and our vision is to make advice more affordable for those that need it the most. So this session is very topical. How can we combine, I guess, what computers can do with human advice? In terms of my background, I have about 20 years experience in financial markets. First 10 years really focused on investment analysis, number crunching, finding the right results. And then probably in the next 10, I really started to appreciate the human side of advice, emotions, behavioral biases, and how they affect investment decision-making, even when you deal with institutional investors. I'm today on Team Human, and I'm not sure the audio was, people heard the audio in the clip, but basically the robot didn't understand the wink that the human made. And I think that gives you a bit of a clue. Robots are not able to understand non-verbal cues. They can't read between the lines. And until such time that they are able to, I think human advice is just that little step ahead. But importantly, I guess later on we'll talk about how we can combine the two. So really excited to be here on the panel.
Thank you, Noah. And our last guest for the panel today, Trisha from ANZ.
Hi, Anna, and thank you. And hi, everyone, and thanks for joining us. Look, my industry experience has been for well over 30 years now. Started, I guess, across Armstrong Jones, which was a small company, 96 people in the company. And since then, there's been a number of brands and a lot of merger and acquisition, which has landed me now with ANZ Investments, of which I've been part of since 2013. And I guess that introduction is a good sort of oversight. It's sitting across my view and my vision of what's happened with advice over the past 30 plus years. And there's certainly been a lot of changes. So like everyone else, I'm looking forward to discussing that, not debating it, because I actually think there's room for both. But today I am with Noah representing the humans. And when thinking about this over the last few weeks, I thought about, market declines make investors very nervous. And I think that courage and conviction are enabled when people have face-to-face human touch interactions. And I think it's, the noise can be alleviated and people can be encouraged to stick to the plan by having a partner or an educator, a human sitting across the table from them. So I look forward to where our discussions land today and welcome everybody. Thank you.
Thank you, panel. So let's get into it. I've got a few questions to start us off, but I encourage the audience to ask any questions through the live Q&A tab, which is either below or next to your screen. And I'll try and manage and get those questions fed through to our panel as we go. Team, our rules of engagement are simple. Engage our audience, share your expertise, and feel free to interject, interrupt, or debate. Ardern Collins fashion rather than Trump Biden fashion. So first and foremost, I guess, and look, I'll open it up to whoever would like to respond, is why use advice? We've got machines, we've got humans, and there's a range of advice, but maybe share an example of where we've had good outcomes for our customers from advice and how they've utilised that.
Anna, I'm happy to pick that one up and start it off. Look, I'm going to refer to Minister Farfoy when I start this discussion. Back in 2018, I was part of, in fact, hosted a conference where the Minister came and spoke. And he talked about his personal experience around not having advice in the early days and then being encouraged by his partner to take advice. And he used 3 words that have resonated with myself and a number of my colleagues. And interestingly enough, he used the same words yesterday, or I think Monday or Tuesday when he spoke. And interestingly enough, Angus Dale Jones emailed me and said, "Did you hear those words?" Angus was with me at this conference, and the words were that the Minister and the government want investors to be wise, informed and motivated. And I think informed is the key word there. Be informed, be able to take advice, be able to access advice and be able to act on that advice. And I think, some examples I refer back to when KiwiSaver started. And I remember there was just a plethora of questions that came in and a huge number of people that joined KiwiSaver really quickly. And about 4 years later, I was speaking at a seminar and a young guy came up to me and said, and in fact, he was quite rude at the start, said, he joined KiwiSaver, didn't want to join it, didn't realise how much money was coming out of his salary. It was negating his ability to go and have a good old jug on a Friday night because he was putting all this money into KiwiSaver. But then he realised because he'd been given advice, because his family, his parents had an advisor, he took up the KiwiSaver and he said, look, I'm standing in front of you today and I've got a balance of about 5,000 or 6,000 in my KiwiSaver. And I would never have done that if I hadn't had advice to put me on the straight and narrow, that I can actually balance my finances. And here I am today thinking that I'd never, ever be in that position. So I think that's one good example. But I think the other thing is that the minister's leading from the front by saying, let's have wise, informed and motivated investors. So for me, you know, there's a lot of research that's been happening across New Zealand and the benefits that advice that people have taken coming out of that. Because I think there's a significant lack of understanding for people to be able to be financially resilient and to make good quality decisions. And I think that's where advice plays a big part in that.
I'd agree with Trisha that absolutely. I think if we all start on the premise that advice is good and needed in many scenarios, but I think the barriers are that simply not enough of people are getting advice because there are either the barriers are too high to access that advice, it's too expensive, which is why we see most people high net worths, those with large balances that have access to a financial advisor or can afford one. We also should kind of recognize that free advice is often tied to the sale of products, and so that's something that that vertical integration has been questioned, across the ditch and Royal Commission, and increasingly here. So I think there's no doubt that advice is needed, but I think we need to look at how can it be relevant, how can it be accessible. And how can we enable investors to make, these wise, informed, motivated decisions? And my feeling is that absolutely a human touch in times of volatility is important. So we know that we require human assurance and trust, that human touch when the markets or the economy are doing really crazy things, particularly this past March. However, I do think that generally speaking, in most cases, advice can be delivered in other channels as well. So I'll leave it there to let other people talk, but happy to go on there.
Some really good points there, and it's obviously I come from a tech background and so on, and I've seen it from the other side of advice and the perception as a customer that it's very much originally seen as a domain of the rich to get advice. And so I very much see that democratization is important so that people can see that they're getting impartial, good advice so they can make informed decisions. But actually, advice is only good if people want to know they need to get it or informed. There's a wider issue around, I suppose, financial literacy, and that from an early age, people need to actually know that they've got to take responsibility for their own financial well-being and understand what the tools are around that, and that they can get advice and where they can get it. So.
Mm.
Let's move then through, because I think there's been some good themes around both the human side and the need and democratization of people being able to give advice at all different levels. So can we talk a little bit about the digital side in terms of the benefits that we see in the digital advice space, and some of the challenges also that you're seeing, starting with Kristen and Gary?
Yeah, I think from a consumer perspective, the financial services industry is not an easy place for the average Kiwi to navigate. Between jargon, it takes and all the PDSs and all of this confusing information. So it's a very complex and confusing thing, and money is very obviously an emotional thing. So I just think that. It's in terms of the customer, we've got to kind of break down these barriers of kind of ease of access, accessibility to really smart information, to increase financial participation and literacy. And I do think that technology is probably the only thing that can solve that on a mass scale and kind of remove those barriers to access. We're increasingly digitally savvy and we're increasingly reliant on digital solutions. So I think while trust is one of the challenges, I think, that we're going to see, and it's probably that early stage, very early stage. It's nascent here in New Zealand, but if there's a sense of, I trust a human, I don't trust a robot, it's only because it's at a very early stage. And I think, you know, the Ubers and the Airbnbs that first pitch their ideas that you're going to have people sharing your cars in your homes and you're going to connect online, or the Tinder dating apps. I mean, that would have been a trust issue that just had to be overcome. And I think probably similar thing with advice. Now, from a business perspective, is it feedback? Sorry, I'll take my headphones out. Is that better? Very good. Apologies. And I think from a business perspective, look, the reality is that we need to be sustainable, and costs in financial industry are coming down. We know that it's a low cost, you know, we're looking to compete in a low cost world, which means that margins are shrinking, and we have to grow by scale. And the only way to do that is technology and through digital solutions. So I think, you know, tech can quickly assimilate a lot of information. It can work with goals and figure out the next best step for most people. And then naturally humans can come in more complex environments or in times of volatility. But again, I think for the customer, we just have to overcome the barrier of trust. And then I think we're kind of well on our way in most scenarios.
Yeah, I think building that trust is important. It's interesting when you look at the technology adoption in New Zealand compared to other countries. We look in the States where it's very tech savvy, and that the use of robo-advice there's been quite a big uptake there. And I think there's a recent survey by, I think, McKinsey that looked at probably 50% plus of people that are actually accepting it and using it, and it's getting bigger. But I guess that's also from a culture of investment culture there. They're also can be early adopters on some of the technology. I think there's also access to that advice as well, in that if there's a finite number of advisors, they can advise a finite number of people. If you're trying to grow the market and give more advice, you're going to follow a linear path of trying to add more advisors, or you can go down, say, leveraging technology where you can reach a lot more people a lot quicker and use those channels. And it's very much the 80-20 rule, that if 80% of people can use that digital advice, and the more difficult cases that need special interventions, you can use people around that. It becomes a kind of a good mix then. And certainly we've seen where technology has been leveraged around that, of focus, get the, I guess, the simpler investments or issues you're dealing with automated, and basically use people in the more complex areas.
Thanks, Gary. Look, a question's just come in from the audience, so I might throw this question out there now. So do you see any risk to customers by allowing them to self-serve while we wait for the rise of the machine? That'll solve, at least in part, access and provision to advice. So I'll throw that one to you, Trisha and Noah.
Noah, you can go if you like. Sorry, Annie, you cut out. I couldn't hear all of the question. Apologies.
Yeah, so look, in terms of should we let people deal with investments for themselves while we wait for robo advice was the question, I guess. I'm not sure, to be honest. I mean, financial literacy has been discussed several times during this conference, and we all know it's an issue. And just, you know, from personal experience, you know, talking at barbecues and dinners about investments, you can just see that a lot of people just, you know, follow trends or whatever they read in the news. They go into cryptocurrency, or they put all their money into Tesla shares. So I'm not sure we'll have great outcomes if if everyone just makes decisions for themselves necessarily. I mean, some people can, but I do think that some, I guess, oversight or some management is necessary. And in fact, for the most part, we see that in Kiwi's favor as well, that people are not 100% free to do whatever they want with their KiwiSaver money, although arguably that's changing at the moment.
Let's build on that a little bit and talk to our two representatives for the humans around the benefits of human advice, and some of the challenges of human advice, which we started to touch on around the scale, but why people continue to use human advice, the benefits of it, and what we think needs to happen to see people move to that hybrid model that we've both started talking about.
So I think, and a lot of people, and I'll go to an example actually that I was looking at the other day, which was around the 6th of February 2018, where the markets had a little bit of a flip overnight. And it was interesting reading 2 days later, where a number of people, and I'm talking a number, probably millions of people, had gone online to Betterment and the other sites like that. And those wealth management websites, they went dark for a couple of days after, there was turbulent trading. There was a lot of sell-offs happening, so a lot of high visitor volumes on those platforms during that period of time. And it was very clear, I think, that people actually wanted hand-holding. They wanted their advisor to say to them, don't react. The algorithm wasn't doing that, but they were actually looking for assistance and having hand-holding. So that's where I think it worked well. And the other thing I can say as a provider, that during COVID, the amount of people that actually rang the contact centres, and I listened to Jonathan Beale yesterday talking about it as well, where they actually wanted to speak to someone just to get confirmation that their investment was okay. So a lot of them hadn't taken advice, and I think you're right, so a lot of people can't afford it. But a lot of people, the first thing they did was pick up the phone and ask for some advice and comfort of where their balance was, particularly in their KiwiSaver space. So I think that's, where it works really, really well. But I agree, there is a place where if you are just wanting to do something really simple, you don't want to have oversight all the time, that's when you can, do something on a platform or use Robo.
I think it's interesting that sorry, no.
Sorry, you go, Gary.
No, I think it's interesting that you say that, because I know in that 2018 blip, we knew about that because we had bots that were actively involved in fund switches and helping people in that. But I think it's a thing of going that if people are reacting to every up and down in a market and trying to bail when they drop, they're actually, it gives you a kind of impression as to the level of knowledge people have got around financial investments, that they don't necessarily understand that there's a long-term gain. If you bail when it drops, you're actually locking in your losses rather than riding it through in the upside, equally when they're high. So I think there's a wider thing there of going in, what is the breakdown of people? And like you said, that if most people are investing without advice, they're not necessarily making wise choices or fully understand what they're buying. So there really is a kind of huge education and how you actually help inform those people as to what they're doing and the journey they're in for. And then, like you say, if there needs to be proactive hand-holding around this when things happen, there just isn't a capacity for advisors to go out to all their clients to tell them this. You're going to have to scale that somehow. You're going to have to be proactive. You're going to see these trends come in potentially and reassure people proactively rather than reactively.
And I think building on that exact point, Gary, is that we have millions of investors now in New Zealand, and there is some hand-holding that's required, but the sheer scale of investors that have come through KiwiSaver is that need to, how do we proactively support them before they make decisions, but also ensure that there is that right balance of technology to be able to help them make those fast, quick decisions that are sensible, but also the ability for them to reach out to have people hold their hand along the way. Noah, you were going to say something.
Yeah, I just wanted to say, I think, what Trisha said, definitely, I agree with that the hand holding is an important part of what humans can do. But I also agree with Gary, we just don't have enough people who can actually do that in a crisis. And I think one of the key missing links Kristen mentioned before is the trust. People don't trust robots or computers just yet with financial advice. And there's some really interesting work going on. I've got a friend who does some research to teach robots that are used in healthcare to make them appear more human, for example, by telling them to lean forwards, or making sure that they ask, how's your day going? So I think there's some really interesting things happening in terms of how can we make sure that some trust is established with the machines. But I think right now it's still lacking, and that's one of the missing links to make sure that people actually trust the machine and don't just want to pick up the phone, but are actually able to get a good answer online as well, that they trust.
Thanks, Noah. Just building on that trust the machines question, actually, I've just had a question come through for Gary and for Kristen. How does the machine know when to stop because it has reached its natural limit of its knowledge?
I think you've got to look at the technology at the moment is probably quite narrow field, and some of the stuff they've got in robo-advice at the moment is okay for simple transactions. And it will have been trained on a set of business rules of offering the right advice or right product suggestion for the profile of the person with the risk, age, and investment. But certainly at the moment, it's not, the technology is probably not affordable or sophisticated enough for the general market for more complex portfolios. But don't get me wrong, it will come. Because again, you're into exponential technology, so every year there's a doubling capability, halving of price, but it's when it gets there. And I think it's important if you're using robo-advice as a provider that those limits are known. Equally as well, when you're training this sort of technology, that you have got a way of positively reinforcing good decisions, monitoring it and bad. There's a lot of stuff about machines using historic data, which is not necessarily the best practice because there's inherent bias. It's not necessarily cleansed, etc. So there are techniques you can use to train it and understand those models. Equally, you want to know how it's come to those decisions, so that if there are mistakes picked up, you can correct them as well and inform people. But I think it's also when you deploy it, it's very much with guardrails around it of what it can be used for.
Yeah, fair point, Gary. And I do think it is a little bit of a one size fits all at the moment, but that is kind of just, again, most of these companies have started with a wedge market, and what they're doing is they're going after people who've received no advice whatsoever. And so they tend to start at the bottom and offer something that's really simple. Those that are high adoption rates in that tech kind of space, younger space. But it's relatively straightforward solutions. So there's input with data. People are looking to set goals. It could be to buying a house or for retirement. The smarter ones will actually personalize a little bit of that. In the States, something called SigFig would look at, well, where do you want to live in retirement? What's your life expectancy and your standard of living? And it'll add a few different smarts. They can kind of pull in accounts, your brokerage accounts, and kind of just say, add that advice. Not fully, you're not well diversified enough, or you're too exposed in this area. Yeah, there's certainly some smart initial stuff going on, but absolutely, it's going to be the future that we'll look to in terms of machine learning, where we'll actually start to do aggregation and analytics and shift from kind of this reactive advisory mode to this proactive, and so we can anticipate the needs and kind of be ubiquitous in our lives.
Thanks, Kristen. I think, and that's really important because it's the future we're looking at. Another question has just come through with that in mind, that is the future that we're looking at. How do we really limit the possibility of harm to the investor while we're still learning how to use that digital advice to the best effect, knowing that that is the vision?
I'm happy to take that. I think the regulators have limited harm, to be fair. So they're really watching this space, and there's very limited scope for what's allowed in the market. And I think regulatory and compliance obligations have made it so it's actually just baby steps at this point. So really, to be very simple, straightforward solutions. So my general sense is that no one is actually using it. So therefore, there's not a lot of risk in the space. goals-based. There's Kiwi Wealth has got a goals-based fund, robo-advisory, and then I know Koda's got a Kiwi Saver one, but very few are actually utilizing it. Now, as we move, again, it'll start with very simple, streamlined. It won't start with a lot of complexity, thereby mitigating risk. And then as we get smarter with technology, then we can increase kind of our confidence and loosen those regulatory limits.
Do you think on that point around regulatory settings, do you think today's regulatory settings are right for the rise of machines? If not, do you think they need to be expanded further?
Would someone want to take that one? That's a political hot potato.
Oh, give me your thoughts.
Yeah, I think it's not so much a question of whether it's regulated right. I think what you really have to look at, what's the alternative? No advice, and yeah. So I'd say regulating robo advice, but at the same time letting people do investment decisions without any advice. I'm not sure that's the right way to go, to sort of over-regulate robo-advice because you're sort of unsure what outcomes you'll get versus, well, on the other hand, there's lots of people that get absolutely no financial advice, I guess is the way I'd sort of approach that. But yeah, it's obviously, an interesting debate in terms of, when do you allow robots to compete with the human advisors? I think that's a discussion that, is ongoing.
Mm. And I think just to add to that is that it's actually when people aren't receiving advice, I would suggest that the majority are actually just doing nothing. And so I think there should be less fear in people kind of going out and acting on their own without advice. If they are, it's with a small percentage of their portfolio, as we see with Hatch. But I would say the larger problem is actually people aren't doing anything.
Right, thanks. Thanks, Kristen. I'm going to throw this one to you, Trisha. You touched on this on your introduction. Questions come from the floor. We use technology to book a flight and a hotel, but we may use a travel agent for more complex trips. Do you see us using robo and human advice together in a similar way?
And look, I think there's a question what you need to think about. It's maybe the question isn't whether people need help managing investments. It's whether the help of an algorithm is enough, or if they actually need a human to weigh in. So I think that the demand for human interaction is steeper for some clients because particularly those that have got more complex financial situations or, conservative risk attitudes. I mean, risk-adverse clients show a much stronger preference for face-to-face communication than those that are more, and more risk tolerant. So I think, when you're new to the game of investing and you don't have much to invest and you want to just go for something that's very vanilla, a robo-advisor can make a lot of sense. But the thing is, we're human, and I think you said it right at the start, Kristen, we talk about money and emotion in the same line, and so we act irrationally and we act emotionally. Even when an investing robot, it's the right thing to do. So I often think if there's not another human to walk us through complex topics or talk us out of rash decisions, that could be a problem. And so, like with the travel, if we're going to do simple travel, we can do that ourselves. But when we do want to go to an off-the-track place or whatever, or get a bigger discount, we'll probably go to a travel agent. So, I think there's room for both, but it is, whether an algorithm is that doing enough, or do you need a human to weigh in and help?
Thanks, Trisha. Just in terms of that and building on what you started on, what are others' views in terms of what customers should consider to decide where on the spectrum they should be seeking advice? Gary.
Can you repeat the can you repeat the question? You broke up there.
Sure, just building on what Trisha said, what should customers consider to decide what advice model to use on the spectrum from the digital through to the advice, human advice?
I think on that, it's like you say, it's from and I think it's that thing around they're going to want higher touch points and advice, the nervous or cautious investors as well. But I think if a majority aren't actually taking advice, that's obviously the opportunity to provide them with frameworks and how they can do that and how they pull them in. I think it's, as was mentioned before, it's better to give some advice than no advice. And again, if we've only geared up to service a few % of the investor population at the moment, I think it's got to be a good thing if you can get to robo-advice around that a larger proportion. So at least they go through a structured process in making decisions and they're tapping in. Because I guess the other thing is if you're using robo-advice, you're going to be getting best of the best. And you can tap into obviously the combined knowledge that is here and offshore in funds as well.
Thank you. I've got a quick question that just come through for Trisha. Will an increase in digital advice have the potential to devalue advice through a human, or alternatively, significantly lift the profile and then the cost of human advice, really placing access to the best into the realm of the rich, which is where we started?
Unfortunately, Anna, your audio is not that flash, so I'm not quite sure what you said, but I think it's about maybe was saying is advice only available to those with larger portfolios and those that can afford it. So I guess one of the things to think about right at the start, you know, one of the things that people will say is the challenge of human advice. And I guess cost and having a one-on-one professional might be something that puts people off. I know in the recent research, Money and You, that the Financial Services Council put out was around that people thought advice was only for people that had large amounts of money and could afford it, and that's absolutely not the case. So I think that's what you were saying. I mean, I don't see the devaluing of advisors or using advisors, because I think there's going to be room, as I said right at the start, for both options. So sorry if I haven't answered the question, but you did cut out, and I think our tech support is looking at our audio at the moment.
Yeah, so look, apologies for the audio challenges that we're facing. Kristen, I know you had some research that you were going to share with us around some of the findings in the advice space.
Yeah, so we actually ran our own research in New Zealand last year, and what we found was that goals-based investing appealed to 80% of respondents, and so that's something that felt relatively easy to grasp and popular. In terms of how people would like to go about and invest, actually the most sought after combination was a self-service platform with the human advisor who helps you make the investment decisions. So there's certainly value placed on receiving advice, but there's a strong sentiment and move that people want to go and execute separately from that. So there's a real willingness to pay for advice and to have that kind of emotional feeling of, I am doing the right thing, I'm taking the next best step. And it could even be, the next popular request was, I want to make most of my decisions myself and just check in to make sure I'm on the right path. So I think advisors are going to have to become more flexible and meet the needs and actually solve the modern problems for consumers is that might just be needed for discrete times throughout their investment journeys to either check in. So like I said, I do see the benefits of kind of a hybrid, but it's going to be less so this full service financial advisory model. In my opinion, I think it's going to be kind of a quasi, and I think there's certainly value to that. We do see with the robo advisors in the US, the majority of customers just use their basic plan, but they all have premium plans, and it could be $100 or $150 an hour just to call someone. That could be to get them started and give them the confidence to do that. Others have a $30 a month fee where you could just check in with people where you want. So I think there's a sense that they'd be talking to thousands of people and recognize needs and look to solve those. And so I think it's really interesting that they've moved in that direction. With respect to the types of advice, human certainly is leads. 74% of New Zealanders have claimed that they would prefer human over robo. It'd be interesting as robo advice increases in penetration and awareness, how that changes over the years, because no doubt across markets, China, Singapore, the US, we're just seeing it. It's a drop in the bucket compared to normal financial advised services, human advised services, and funds under management. But what we're seeing is growth. So it's certainly moving in a direction of change.
Thanks, Kristen. Just in terms of that growth and that direction of change, I'd like to know probably from each of our panelists, what do you think the landscape will look like in 5 years' time?
I'll start that one if you like. Look, I think the role of an advisor, and whether it's an algorithm or whether it's a human touch, is going to be almost about being a life and well-being coach. So we know now that the advisors do play roles outside just giving financial advice. They become counsellors, they become, big parts of people's families. So I think going forward, I'd like to see more advisors, but is it going to be a profession of choice? I don't know. I certainly will see our millennials taking advantage more of the robo advice. That will play well into their hands and exactly how they would like to operate. But I think it's going to be a lot about life coaching, well-being, resilience. They're the words that we'll be hearing into the future across this industry.
Just to add to that, I completely agree with Trisha, and we see that on Ellevest, which is a fabulous investment platform tailored just for women in the US. They actually have a life coach, and so you can pay a subscription because they recognize that investing is just a very small part of our wealth generation, and it's everything from career advice to asking for the next salary, budgeting, savings, saving on cutting costs. And so I think absolutely, I think that's such a modern way of looking at things, and I look forward to kind of technology, a hybrid model with that life coach.
Yeah, I agree with what Trisha and Kristen said, and I think this was mentioned before. There's going to be times where you need some human interaction, and it's about how you can organize a service where people, if they need it, they can talk to someone, or if things go really badly in terms of outcome, they can talk to someone. So I think the big challenge will be to recognize when is it time to pick up the phone and talk to someone, or when do you give people the opportunity to talk to you. Because the problem is, and I think Henry from Generate mentioned that in our session, everyone wants to get on the phone at the same time. So how do you deal with that in a moment of crisis? I think that's one of the challenges. Everyone will want the human part at exactly the same point in time. So how we solve that, I think is an open question.
Yeah, I think in 5 years' time, I think it's definitely, it'll be predominant robo advice, because basically the digitization codification of the advice that you're giving to the compliance side, as well as what's out there in the markets, it's going to be so cheap to provide that basically, why would you go to a person and pay for it when you can get better advice from these sorts of algorithms? Now, I think as well is that the other driver is around millennials and others is a customization and tailoring to individual needs. And it's effectively, like you say, there's platforms or combined offerings that look at your financial, personal, spiritual wealth, health, and so on. And it's a combination of all of those, because as we know, as you go through life, you've got different requirements as you go through. And it's the balancing in all aspects of your life. And I think it's a thing as well that we often buy financial risk products, etc., health products, all in silos, when actually you're looking at what is the individual need of a customer and what do they need at this stage, and etc., and as they transition. Equally, like you say, that there's that ability to flex for plans of premium to standard and in between. And I think it's, as you said, in some of the products in the States, that most people go for the basic around stuff. It's that ability to add extra layers, or the ability that people sometimes will need to speak to a person. But I think the predominance will be around effectively robo type advice and guidance and customization.
And Anna, I think it's going to be interesting. I've been talking to a number of advisors lately and talking about intergenerational money. So it's quite interesting that advisor might have clients who are baby boomers, and they're being encouraged to make sure that the rest of the family knows what's going on with mum and dad's money or the grandparents' money. And millennials are coming into some of these advisory meetings. And I think the advisors are learning from the clients that the millennials want to be in that robo world, and mum and dad and the grandparents want to have that human touch. So, you're going to have advisors that are going to learn from their clients, which I think is great, and kind of welcome them and engage them in that world that, one size doesn't fit all. And, now your job is going to be that you're going to have to deal with different generations and different ways that people want to deal about their financial future. So I think that's interesting as well. And I'm hearing a lot of those stories now where that interlinking of that human and that robot is coming in now, just purely through this transition of intergenerational money. So, I think in that way, it's fantastic.
Yeah, look, it's pretty exciting when we look ahead 5 years, 5 or 10 years. But I mean, I think what we're hearing is 74% of New Zealanders today prefer humans. We expect that as technology increases, as it learns more, that'll increase. But the two words that I'm hearing a lot of are hybrid and holistic. And what is going to be really important is about tapping into these various points in life stages where people do need more or less help and hold-handing to get there. So it does feel very much like a life coaching story. Just tell me, just on that and the intergenerational things, what do you think we should be encouraging our kids to study at university? Should we be encouraging them to do their financial advice studies, or should we be encouraging them to study digital or something else completely?
I might start with that quickly. At a presentation a couple of years ago, or maybe 3, I've heard what are the 3 things that computers can't do, and it's be creative, take risks, so be like an entrepreneur, and EQ, emotional intelligence. So I guess based on that, I'd say, well, if you do art and literature or psychology, maybe not a bad thing. It doesn't necessarily have to be science or finance.
Yeah, I'm with you on that one as well. I think it's the human touch, skills of empathy, like you say, understanding and creativity are certainly the areas. It's almost like I'm encouraging another renaissance, because although I come from a science background, it's all this stuff is the stuff that can easily be automated and actually done a lot better.
And from my perspective, it would be financial advice, being trained to be a financial advisor. But it's interesting, you think about a bank, and I work for a bank, and traditionally bankers employ bankers. But now, as a bank and a corporate and a large employer, the bank is now around employing people that are great in tech and employing people that are great in risk and governance. So again, you know, different story for a bank. So for me, it's yes, be a financial advisor, trained to do that. But, you know, don't set your sights on just solely doing that. Have that tech, if you've got that tech bent, use that wisely as well.
And I would just add problem solving and critical thinking, I think, is what I chat with my kids a lot about. And there's a growing field of user experience, and I'd encourage anyone, any young person, to look into that if they've got some, you know, kind of, if they're creative, if they're curious, user experience. If we believe that the customer is the most important, and every business in the future is going to win on that customer experience and solving those problems, be it with robots, be it with humans. It's that curiosity and it's that problem solving that we need, that's going to you know, design that into our future platforms. So I would suggest absolutely that field of user experience, which isn't really technical. They can work with technologists and, you know, work with cross-functional teams. I would suggest that that's a very important and growing industry.
Thank you, Kristen, and thank you very much, panel. We're coming pretty much to the end of our time now. It sounds like my kids are going to be at university for about 10 years because they've got to study so many different things based on those answers. So hoping for some easy direction. But thank you, Gary. Thank you, Kristen. Thank you, Noah. And thank you, Trisha. Thank you for your insights. And thank you to the audience for joining us today. There was a couple of questions we didn't get to. So thank you for your engagement. And we'll be signing out shortly from the Financial Services Council 2020 conference. Stick on the line. There's just a little wrap up to go. But thanks for your time, everyone.
Wow, what a range of insightful discussions there have been. I'm sure you had some difficulty choosing which session to attend, but then again, that's what's great about digital. They're all recorded and available to watch on demand at your leisure. There's no fear of missing out here. And so I guess that this brings the FSC conference to a final close. In a year full of uncertainty, adaptation, resilience, and agility, I think I can speak on behalf of the audience and say what a fabulous 3 days it has been. You have been an engaged, enthusiastic, and totally delightful audience, and we are very thankful that you have been here with us. I'm Yvonne Davey, Manager, Super and Savings, Craig's Investment Partners, and I have been your MC for day 3. I've thoroughly enjoyed sharing the show with you today. Thank you to the team here in the studio, and have a good night. E noho rā.